Get Rich Education is brought to you by Norada Real Estate, International Coffee Farms, and Corporate Direct.
Garrett Sutton here, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate and paper asset holdings with the right mix of LLCs and corporations. My firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention Get Rich Education for a free bonus. Switch your resident agent service to us and receive another bonus. It's all good. We look forward to assisting you at corporatedirect.com.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education, episode 84. I'm your host, Keith Weinhold, with listeners in 164 world nations. Thank you for making us iHeartRadio's investing show choice, and thank you for being here. But as always, you're not here for me, you're here for you. That's why I'm back for another week to help you build your wealth. Because you've got to beware of the scarcity mentality, since the scarcity mentality is abundant and the abundance mentality is scarce. Our guest today is Robert Kiyosaki, the very well-known Rich Dad, Poor Dad author. In fact, he is the #1 selling personal finance author of all time, and his thoughts have had more influence on this show and the way that I think about investing than any other person on earth, okay? Now, of course, that doesn't mean I agree with everything that he says, just like I don't agree with everything that anyone says. To me, it is just a really special honor to have him on with me today. My interview with Mr. Kiyosaki is coming up shortly. You know, he's been an influencer on me to the degree that I say some of the things I've said for 84 straight weeks here now, okay? Like, don't save money for the long term. Yeah, that's right. Don't save money for the long term. It does not pay to be a saver. It hasn't for years and years. I mean, really for about 2 generations, ever since President Nixon took us off the gold standard in 1971. Okay, instead, only save for the short term and invest that chunk in a cash flowing asset that pays you every month, because we don't want to save, we want to invest, okay? Inflation exceeds savings rate, which diminishes your purchasing power and in turn steals away your prosperity, all right? Now, some people say that they're investors because they're saving in a 401k or an IRA. Oh, jeez. Saving money in a 401k, see, that is saving for the long term. I wouldn't do that, and I don't do that because I would rather create wealth, okay? Look, an investment is something that pays you every month. You don't instead pay it every month. Well, you have to pay your 401k every month. That's why it's the direct opposite of a sound investment, okay? Well, now, some are going to say, well, there's tax efficiency in the 401k, okay? Well, yeah, but probably less tax efficiency than there is with investment real estate or direct investing in oil and gas wells, okay? See, that critic is missing the point, and you don't let the tax tail wag the dog anyway. Returns, rates of return matter more than taxes, and you know what stage of life you receive your returns in, that means even more, and most people really overlook that last one, okay? The real tragedy really is that people celebrate the 401k as a tax deferral plan. And what it really is a life deferral plan. You're deferring what you could do with that money until you're in your 60s or later, which is when you start drawing down your 401k. Well, you're deferring your monetary fueled ambitions, opportunities, travel, hobbies, your own children, okay? You're deferring whatever you would want to spend that money on. You're deferring life just so that you could defer tax. Well, if you're a Get Rich Education listener, well, then you're not, okay? A 401k is a life deferral plan. Now, I've said that on other shows. If you get a one-to-one match from an employer, well, maybe that you would want to take that in your 401k. Okay, that's a 100% return. Otherwise, I implore you to quit deferring life and paying into a vehicle when instead you could have cash flowing real estate. Now, that's a vehicle that pays you every month. And see, it pays you in young age, in middle age, and in old age. Now, that is far superior to a scarcity-minded retirement plan. Instead, you have an investment. That is a lifestyle arbitrage plan. That is smart, okay? It's not a life deferral plan like some slack-jawed 401k. And with cash flow, you're living better and you're giving better than you ever thought you could. Okay, you don't pay it, it pays you. You want to use care with the words that you use, with the words that you choose, okay? As longtime listeners know, I don't even like the term or the phrase saving money because it reinforces a scarcity mentality, okay? Replace the words save money with get liquid, as in I want to get liquid to buy that next piece of cash flowing turnkey real estate, okay? So don't save money, get liquid. And hey, terminology matters. Yeah, I mean, don't create a budget. Instead, create a cash flow statement. All right, basically the same thing, but a cash flow statement is more abundant. That's a more abundant phrase than some penny pinching budget. And why do the words that you use matter? Well, your thoughts become your words become your actions soon become your patterns, and your patterns develop who you are. Robert Kiyosaki's landmark book, Rich Dad, Poor Dad, is about Robert's upbringing in Hawaii and his two fathers, one rich father who was not his real father, and one poor father who was his biological father. Kiyosaki, growing up, was forced to choose between following in the footsteps of his poor father, who was a highly educated government worker, or following his rich father, an entrepreneur who never graduated high school. Ultimately, Kiyosaki decides to learn from his rich dad. I mean, right? Of course, who wouldn't? The book, Rich Dad, Poor Dad, focuses mostly on the education and financial advice Kiyosaki learned from his rich dad. Okay, his rich father was able to create a multi-million-dollar empire from virtually nothing, just using his own financial acumen. Kiyosaki really inspires and educates others on how to leave what he calls the rat race, which is the life that really so many people choose because they think they have no other choice. People go through life in the rat race and they kind of do, at times, whatever it takes to climb the corporate ladder for an employer. And what they're doing all along the way is they're selling their time for money. They're going through life trading their time, the very fabric of their life. They're trading their time for dollars, okay? Well-educated people, they typically don't know how to handle money. And the result is that the majority of people, they get trapped in work to pay their bills and they're chasing paychecks all their life. Well, why does that happen to intelligent people? Well, it's because people don't get financial education in school, and once people have locked onto what they think they know, it's just really hard to change their opinion because they believe the same wrong or outdated thing for so long. But one thing helped change that for a lot of people, and that is Robert Kiyosaki's 1997 book, Rich Dad, Poor Dad. That was that catalyst for readers that just knocked readers upside their head like it did for me, and told us basically You're an idiot if you spend most of your productive years trading your time, the very fabric of your life, for dollars, okay? It's been so influential. The actor Will Smith famously made his kids read Rich Dad, Poor Dad. And, one lesson in Rich Dad, Poor Dad, it's really lesson one in the book, is the rich don't work for money. It's a powerful statement that has drawn in like tens of millions of readers. The rich don't work for money. Kiyosaki's gone on to publish tons of other popular books like Cash Flow Quadrant, where he stresses that employees and small business owners are the most heavily taxed, and they're the people that have often created lives with the least discretionary time for themselves, too. You want to be over on the I side of the quadrant. I stands for investor. Robert is friends with Donald Trump. Kiyosaki and Trump have already published 2 books together, so it's kind of interesting here now that in the United States, we're on the precipice of potentially having a well-known real estate investor as president. And I sure don't take a political stance either way, but today I am going to ask Kiyosaki about his longtime friendship with Donald Trump. Robert Kiyosaki says some things that I guess are thought-provoking and even polarizing sometimes. What his comments really do is they sort of antagonize conventional wisdom, I guess is the best way I can say it. But you know what some of Kiyosaki's comments and quotes are above all, perhaps, is that they're just plain memorable. And I love some of these, which were really paradigm breakers for a lot of people when they first heard Kiyosaki say them. I'm just going to focus on 3 here, okay? 3 things Kiyosaki says. Number 1 is your house is not an asset. Number 2, savers are losers, debtors are winners. And number 3, and it is my all-time favorite, don't live below your means, expand your means, okay? Let's break this down. Number 1, your house is not an asset because, again, it doesn't feed you. It doesn't pay you. You feed your house. You pay your house. Every month, you pay your house's mortgage, property taxes, insurance, maintenance, repairs, utilities. Number 2, savers are losers, debtors are winners. I already described how savers are losers, debtors are winners when you borrow for real estate like Mr. Kiyosaki and I do, okay? Our tenants pay back our debts for us while the leftover rent income, after all the expenses are paid, that's our monthly income. And at the same time, we're leveraging a capital asset. And number 3, don't live below your means, expand your means. It's not only my favorite Kiyosaki quotable of all time, but it might be the most central, I guess, sentence to Get Rich Education, which I've discussed at length on other episodes. So again, those 3 are number 1, your house is not an asset. Number 2, savers are losers, debtors are winners. And number 3, don't live below your means, expand your means. In 2002, Kiyosaki wrote a book called Rich Dad's Prophecy, where he predicted a major economic catastrophe that would occur in a year well into the future. And you know what the year of that predicted meltdown was? 2016. Yes, today. So I'm definitely going to ask him about that and see if he still thinks that that's going to come true or if he'd like to modify that prediction. Kiyosaki likes the analogy that financial education means that you are on the edge of a coin if you're well educated, because when you occupy the edge of a coin, you can see both sides and really have all of the perspectives. Today, Kiyosaki is probably best known still as the author of Rich Dad, Poor Dad, the #1 personal finance book of all time. He really challenges and changes the way that tens of millions of people around the world think about money. Today, he is an entrepreneur, educator, and investor who believes that the world needs more entrepreneurs. He still has perspectives on money and investing that contradict conventional wisdom. Robert's earned an international reputation for unfiltered straight talk, irreverence, and courage, and he's become a passionate and outspoken advocate for financial education. Robert's most recent finance book, released in January of 2015, is called Second Chance: For Your Money, Your Life, and Our World. I mentioned that Robert has also co-authored 2 of those books with Donald Trump, and a 3rd Trump Kiyosaki book is in development right now. You can learn more at richdad.com. It will be Robert Kiyosaki and I as soon as we come back. I'm your host, Keith Weinhold. This is Get Rich Education. Now, this is something exciting. Through Get Rich Education and International Coffee Farms, you can once again own your own half-acre parcels of a passive income-generating coffee farm in Panama for as little as $13,000. This farm is going to be planted with the most in-demand varietals of specialty coffee in the market today. The farms are professionally managed for you on a turnkey basis, and you own the land. It's a low-risk opportunity with an average annual return projected at 12%, and that doesn't even include potential appreciation in the value of the land. These affordable raw land offerings are available only for Get Rich Education listeners through June 30th, and then if there are any parcels left at that time, the offer is going to go public. Parcels are allocated on a first-come, first-served basis. To learn more, just send an email with your contact info to coffee@getricheducation.com.
Are you looking for a roadmap to financial freedom? If so, we have a solution for you. Norada Real Estate is offering a limited number of free strategy sessions to help you get out of the rat race. Learn how you can create wealth and build monthly passive income. To set up a time with one of our knowledgeable investment counselors, simply go to noradarealestate.com. That's NORADA realestate.com.
This is Rich Dad Advisor Tom Wheelwright. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Well, it's such an honor to have you here. Welcome to Get Rich Education, Robert Kiyosaki.
How are you doing? Well, thank you.
Hey, I'm feeling pretty good today. Well, go ahead and tell us about your business and investing background and just a little bit about the Rich Dad Poor Dad thesis.
Well, first of all, I want to commend you, Keith, for being an avid learner, a student. But the other thing is you took action. A lot of people are paralyzed. They do nothing. They're really smart, but they don't do anything. That's the problem.
Yep. Wealth doesn't necessarily go to the most hardworking or even the most intelligent. It goes to the most bold. I think that's something that I read that you wrote.
Well, it's a different kind of intelligence, And, we last saw each other at the Real Estate Guys Summit at Sea. And those guys are interesting guys, too. I mean, they're real estate investors. So if you guys have a chance, this is my commercial plug. Every year they have a Real Estate Guys Summit at Sea, and I would recommend you guys go to it because you'll meet real estate investors. And as you know, most people many people own real estate, but they're not real estate investors. In fact, most are losers. So that's why I really got to be careful because your brain is your most important asset. And if you listen to a pack of losers, then you become just like them. So anyway, I congratulate Keith, for always investing in your education.
Thank you. Your book, Rich Dad, Poor Dad, I think it gave readers kind of written words to express that internal dialogue that goes on in their head every day, that interplay between time and money and work and freedom. Tell us a little bit more about why you think Rich Dad, Poor Dad has been so influential.
Well, number one is our academic system, much like our political system and our judicial system, is broken. Our academic system is still in the dark ages and is still teaching people to go to school and find a job. And today, millions of young people go to school, they get deeply in debt, student loan debt. Student loan debt is now the second largest debt in the United States. It passed credit card debt. The only debt larger than student loan debt is home mortgages. And if you read Rich Dad, Poor Dad, you know how stupid that is because I was saying, Rich Dad, Poor Dad, your house is not an asset. And I've been saying that since 1997. And then it drives most middle-class homeowners nuts because they've been told their house is an asset. And so they get deeply in debt to buy this home, which makes them not the brightest people on earth, even though they may have a PhD and whatever. So there's a lack of financial education in our academic system and in our homes, which is the real financial crisis we are in today as a nation.
Now, you and Donald Trump have published multiple successful books together. I'm sure Donald Trump learned plenty from you. What have you learned from working with Donald Trump?
First of all, he's a great man, and I'm supporting him for president of the United States. I'm not Republican or Democrat, and even though he's my friend, I wouldn't vote for him if he wasn't a good man. What I'm saying is he's a great man. In person, he is funny, he is very witty. Unfortunately, when he stands up on stage, the other Donald Trump loves to make fun of people, which is not politically correct, but it's working for him. The other thing, too, is when you look at all the candidates, who was most qualified at this time in history to get us out of this financial crisis? And there's only one person, it's Donald Trump. I mean, Hillary is a nice person, but she is what you call the political elite. She's lost touch with reality. And Bernie Sanders, I love him dearly, but he is a communist. He really believes in giving everybody everything, which I would like to too. But I always heard, give a man a fish, you feed him for a day. Or as Trump says, if you deport him, you have to feed him anymore. But anyway, this whole presidential election is a joke. It is hysterical. It beats the Jerry Springer show, in my opinion. And on the other side, you have Donald Trump, who is a pretty straight-talking guy. He is both very liberal and very capitalistic. And that's what drives Republicans nuts, and it drives the Democrats nuts. So I'm not Republican or Democrat. I'm not even independent. I just vote for the person who can get the job done. So that's why Donald and I have been friends for about 12 years now. His sons and I are very good friends. His daughter's probably the brightest match in the box, and they're a fabulous family. So that's what I learned from Donald is, just stick to your guns and be forthright in my conversation with people.
Well, whether it's in politics or whether it's in business, I think Donald Trump has shown that he can be bold. We're talking about one of the best known real estate investors ever. And I kind of learned from you for the first time, seeing it in writing, that oftentimes wealth goes to the bold. It doesn't necessarily go to the smartest or even the most hardworking, but wealth often transfers to the bold.
Well, that's my whole complaint against academia. My poor dad was head of education, PhD, Stanford graduate, University of Chicago, Northwestern, graduated from University of Hawaii in less than 2 years, but he had high IQ. School focuses on your IQ, your mental intelligence. And IQ records how you solve problems on your own. So that's a lot of times why the A students are functionally incompetent in the real world. Most Mensa people, which are geniuses, are not successful, but they have high IQ. There's 4 types of intelligence quotients that must have. One is IQ, which is mental. Second is EQ, emotional intelligence. Emotional intelligence is 3 times stronger than IQ. So emotions are fear, anger, joy, sadness, and things like that. And the reason most people are not successful in anything in life is they may have high IQ, but very low EQ. They're afraid of taking risks, and they say, when their emotions start talking, I can hear them, investing is risky. Well, it's easy for you to say because you have money. I don't have money. The rich are evil. Those are just EQ or low EQ talking. The other is PQ, physical intelligence. Most athletes are gifted physically. And as you know, we actually learn by doing. But the problem is our school system punishes you for making mistakes, so people get paralyzed. It's really stupid. It is so effing stupid. Why would you punish somebody for making mistakes? That's very low. They don't learn anything. They live in low EQ, low PQ. And then the last intelligence is SQ, which is spiritual intelligence. And the reason most people play it safe and live debt-free and all that is they're very low spiritual intelligence. They don't trust there is a God out there. I'm not really religious. I support you want to be Christian, Catholic, Muslim, Hindu, Arab, and have a good life. But spiritual intelligence occurs when you move from the known into the unknown. Your spiritual intelligence comes alive when you're doing something you've never done before. And most people who are so-called middle class, they're living in terror. Low emotional intelligence, low physical intelligence, and low spiritual intelligence. So they live debt-free, they live below their means, they play it safe. The worst thing is they save money. Why would you save money when Japan lowered its interest rates? When Europe lowered its interest rates? Why would you save money? Ken McElroy, Rich Dad Advisor, we just borrowed $300 million at 2.5% interest. The banks are giving away money. But, no, I'm going to save money. So what's happening to savers or losers, which I said in Rich Dad Poor Dad. So I said, your house is not an asset. The rich don't work for money and savers are losers. And that was in 1997. And here we are some 20 years later, it's coming true. And yet people still save money and invest in the stock market at an all-time high of 18,000. Look, sweetheart, that stock market is going to come down. The next time it comes down, I don't know if the Fed can prop it up. And that means everybody who's been planning for retirement, the old guys like me, will probably have a spiritual experience. Thank you, God. What if God saved me?
Yeah. Well, I don't know if anything can save us. And we're talking here in 2016, and you've long predicted that there will be an economic crash in 2016. So what is it? What is it about 2016 that gives us a high propensity to have a major economic crash?
I knew the crash was coming in 2016 back in 1980 because my rich dad was talking about this thing called the 401k, which, as you know, I think there's 55 million people have one today. And he was just making this prediction based upon demographics. He says, the 401k is a tax plan. That's all it is. So you put your money in so-called tax-free, but when you withdraw your money, the 401k taxes you at ordinary income. You believe that? Why would you retire on ordinary income? You got to be really stupid. But anyway, so he said there was a flaw in the law that said at 70 and a half, baby boomers, which is the first generation to have a 401k, must start withdrawing at 70 and a half. That's 2016. So what's going to happen? You have, let's say, 50 million people in America of 300 million. They're going to start withdrawing their money. So it's pure demographics. If the money's coming out of the market and people are going for capital gains, which means the price of stocks will go up, they ain't going to go up. And then when emotions kick in, which is EQ, they're going to start yanking their money out at high speed. So it was very easy back 16, 17 years ago to predict that 2016 was a year. I also predicted that terrorism would increase. And today we have ISIS threatening the world. I didn't think it was going to be this bad, though. So I see the prediction of 2016 will probably be stalled for a couple of years, but it will come down before 2020.
Well, how bad do you think it's going to get? I mean, what does an economic crash actually look like? How bad will it get?
I always say there's three sides to a coin: heads, tails, and the edge of the coin. I rather stand on the edge. Intelligence is found on the edge. So for some people, it's going to be bad, but for me, it's going to be great. During the real estate crash started in January of 2007. Ken McElroy, Kim, and I were standing on the side. When the crash came, then we went in 2009 and we started buying probably $1 billion worth of real estate. So crashes are wonderful, just absolutely wonderful. But if you're high IQ and low EQ, crashes are terrible. So that's really kind of I'd rather be on the side of the rich than the middle class. That's what I'm saying.
Yeah, the 2007 real estate crash is something that I actually profited from as well. In fact, you famously say that you've lost money in business, but you've actually never lost money in real estate. So anything else around real estate investing that keeps you from taking a loss?
Well, real estate is pretty simple because there is actually a physical structure. It's either land or a built, sticks and bricks. Whereas a business is based upon people, especially today. And, today people are as untrustworthy as they come. They're nice people, they're pleasant to you. But most of them have no business skill at all, but they think they're Donald Trump or something, So I've got to talk to what I call village idiots all day long. Well, I'm a techie. I'm going, yeah, what do you know about this? I'm a techie. And they got their apps and all this stuff, but they really don't know the fundamentals of business. So they're, the cash flow quadrants, so there's employee, self-employed, and then there's big business and investors. And most people are E's and S's thinking they're B's and I's. And I got to talk to these idiots all day long. I'm sitting there going, you guys don't know anything about business, but I'm a techie. I make a lot of money on the web. I'm going, but you're a techie. That's all you are. Oh. And, for me, I always say business is a team sport. They don't have a team. They're S's. And S's, self-employed, small business, or specialists like doctors, lawyers, and techies, they think differently than big business owners and investors. Most techies have no team. Most techies hang out with other techies. Do you know what I mean? I hang out with my accountants and my attorneys, my marketing guys, Ken McElroy, and I hang out with a different team. And most techies and attorneys and doctors, they hang out with other attorneys, techies, and doctors. That's why they're not that smart.
If you are the average of the 5 people that you spend the most time with, you've got a pretty amazing 5 there.
Yeah, and most people hang out with brokers, like stockbrokers, real estate brokers, and insurance brokers. And as Rich had always said, brokers are broker than you are. They're E's and S's. And you take advice from these guys. Very interesting.
If one has some disposable equity, maybe $10,000, maybe the best thing for them to do is invest in their education. But once they've invested in their education, what might be a good place for someone to stash, say, $100,000 today?
$100,000 with quantitative easing going on and negative interest rates, man, I would get rid of that stuff as fast as I can. You see, that the problem is most people think saving money and investing money, just putting it somewhere, it's going to grow up. What Rich Dad's prophecy was in 2016, this baby's coming down. I just read Mohammed El-Arian, who was with PIMCO, and he's on the President Obama's Committee on Financial Education. He says that the whole world economy is coming down in less than 3 years. So in economics, it's called a T-junction. We cannot keep bullying people any longer. So 2016 was fairly accurate. It's coming down right now. But El-Arian says we have maybe 3 years. And it all depends upon, can the Fed and the central banks like Bank of Japan and the ECB, European central banks, and the Bank of China, can they keep the charade going? So to ask me what should I do with $100,000 means you better study the world economy and get some information. You remember on the real estate guy's cruise, my whole thing was we were studying Rickards, who's at the new case for gold. And he says the same thing that El-Arian is saying, and the same thing that Ed Griffin is saying, is that the dollar is corrupt. You're hanging on to $100,000. You got to be nuts. You have got to be the most ignorant person on earth, not paying attention to what's going on. So that's why what Rickard said in his book, The New Case for Gold, is when the central banks collapse, which is what El-Arian is saying, they're going to have to kick it up to the IMF and the World Bank. See, we're going to a new form of currency, and it's called SDR, special drawing rights. So that's why I did that talk at the real estate guy's cruise, is you have to understand the problem is our currency. The dollar cash is trash. So why would you hang on to $100,000? I'd figure out as fast a way as I could place it. So that's what I'm doing. But that includes, I have to understand the world economy also. If you're saving money, going to school, investing for the long term in the stock market, buying a house and getting out of debt, you're the village idiot today. That's not it. That's high. That may be high IQ from 30 years ago, but it's low EQ. It takes EQ, emotional intelligence, to actually take action and make changes. But most people cannot get rid of those stupid words in their heads. Save money and invest for the long term in the stock market. Buy a house because your house is an asset. If you don't get rid of those words in your head, you'll probably be a victim in the next few years.
Yeah, saving money for the long term, it really didn't make sense when you published the book in 1997, and it probably makes even less sense today when interest rates are even lower.
Did you remember what Rickard said in The New Case for Gold? The central banks are gone. That's what El-Arian is saying. In other words, the monetary system is coming down. And people go, what does that mean? Well, that's why you understand debt, which is why I like real estate. And that's why I understand gold and oil and silver. Look at oil. It's so low. I'm buying more of it today because it is low. Everybody else is getting out of oil. It's really low EQ, not high IQ.
How do you think one can best hedge themselves against the crash that's coming shortly? What are some of the things that one can do?
I would read James Rickard's books, The New Case for Gold. It's not about gold, it's about the world economy. You have to understand how the long bond operates. They suppress interest rates because they want you to borrow money. You see, debt is money. That's why I love real estate. I don't like real estate, I like debt. And the more money I borrow, the less tax I pay. That's smart to me. But to put money in a 401k or an IRA when the stock market is an all-time high, you've got to be a village idiot right now. And, I know Alaska's based upon oil. You have that slush fund that keeps all Alaskans in this false sense of security. But right now, that slush fund only makes Alaskans poor because they get more stupid. As Donald Trump says, if you give a man a fish, you feed him for a day. But if you deport him, you don't have to feed him anymore. And what's going to happen for most people is when that slush fund money quits, That's when they're going to find out what happens. And to me, that's good news because I'm going to buy more oil because my whole background is oil. I work for Standard Oil, John D. Rockefeller. And you see, oil is the money of the world, not gold. You know, we're still fighting in Mosul. ISIS is in Mosul. Mosul was in a country called Mesopotamia. It's called Iraq today. What's his name? Saddam Hussein made the tragic mistake. In 1999, the euro came into existence. In 2000, Saddam said, hey, I'm not going to trade in dollars anymore. I'm going to trade in euros. Bam! He's dead because the world is going to defend the dollar. A guy named Gaddafi, nice guy. I don't know if you know this, not an oil guy. Libya has great oil. Libya is a very rich country. But as soon as Gaddafi said, I'm going to trade in dinars, which is their currency, poof, he's dead. And that's Benghazi, which is haunting Hillary today. So all I'm saying to people is, you know, wake up and smell the coffee and realize that what you see may not be true. So I think the world is a great place right now. I'm buying oil because it's cheap. I love the stuff. And I think the world's going to come apart. It's going to crash. It's going to be wonderful. But if you have low EQ, low emotional intelligence, I'm scaring the crap out of you right now.
That's right. Emotions can run high when markets are at highs and when markets are at lows.
And you make more money when they crash. And oil has crashed right now. So that's why it's good news for me. I'm buying the heck out of it. I don't get richer than most Alaskans.
Yep. Your opportunity cost is high if you buy when the market's high, and your opportunity's high if you buy when the market's low. But a lot of people just don't have the courage to do that because they fall back on another emotion, fear.
Right. That's my lesson. So if you're going to have $100,000, you got to figure out your risk tolerance, your education, and how smart are you financially. You may have a PhD, but know nothing about money. High IQ, low EQ.
Well, you and I, we've had some good investing success, and we have an opportunity to give to and serve others. So I guess if you did not have the Rich Dad Company today, you know, what kind of global problem do you think that you would try to solve? Would that be energy or the environment, education, infrastructure, healthcare, poverty? What would you try to solve?
Well, I don't need the Rich Dad Company anyway, because I'm a real estate guy. So I just educate people about debt, the monetary system, and all that. I would do it with or without the Rich Dad Company. In Rich Dad, Poor Dad, Lesson 1, the rich don't work for money.
Lesson 1.
That's lesson 1. I don't work for money. I have assets. As I said to you, as the interest rates kept coming down, I started investing in real estate when it was 18%, 16%, 12%, 9%. Today it's 2.5%. Why aren't people borrowing money? Because they're afraid. You know, they don't know a good deal from a bad deal. So what I'm trying to say to people is, unfortunately, in the next few years, I'm afraid to say millions of people with high IQs and low EQs are going to get wiped out. But it's a good time for those with high EQ.
It takes a higher financial IQ to really distinguish the difference between good debt and bad debt. I like to say that with good debt, with real estate money tied to a long-term mortgage in a sustainable market where you're going to have tenants that pay the rent, you have the ability to outsource every bit of your debt to tenants as long as your property is one that creates cash flow. Every bit of that debt is outsourced. That's financial intelligence with debt.
Yeah, so what?
So get more of it.
Now, that's what I'm saying. You should go on the real estate guy's cruise. You know, I'm trying to tell you the problem isn't anything but our monetary system. It's not fiscal, it's monetary. And the average guy doesn't know what that means. You know, they went to school and got economics, but they don't understand the difference between monetary and fiscal policies. Our monetary policies are coming apart. And that's why I had you guys study Ricker's book, The New Case for Money, and what is helicopter money. And the average person doesn't know. They sit there getting their PhD, sitting in Starbucks and investing for the long term in the stock market because the stock market is at all-time highs. And they're saving money. Those are the village idiots today. Oil is at all-time lows. I remember oil when it was like $1 a barrel or something. I hope it goes lower. I'm going to buy more of it. It's a different mentality because I have EQ, although as a village idiot in school, I have low IQ. Understand the world economic system right now. That's all I'm saying. It's not about real estate.
Well, you're such a renowned financial educator. Why don't you tell us what's the last course that you took or the last book that you read?
I never take a last. I'm always reading. Look, I'm going to just say something really, really quickly, because the reason people are stupid, they listen to stupid teachers. The story of Rich Dad and Poor Dad is the problem with academic people versus rich people. Bernie Sanders versus Donald Trump. Trump is both a very smart man, but he is financially very astute. So you got to choose your teachers wisely. The reason I read books is because I'm looking for the best teachers. You're not going to find the best teachers at your community college or the University of Hawaii or Harvard. They don't make as much money as I do. So I want to listen to guys who are the best teachers, which is why I read books. So today, I'm still reading L. Arian's book. I'm reading David Stockman's book. But anyway, I've never stopped studying. And I think that's the difference. I am studying the monetary system. I don't really care who gets elected. I don't care if it's Trump or Bernie. If it's Hillary, we'll have more of the same. The point here is you should care. And the next most important thing, who's on your team? I have my team. Every month we get together and study. My accountants, my attorneys, Ken McElroy, real estate guys, we study constantly. That's why we win. If you're hanging out with stupid people who don't study, you're in trouble because your brain's in trouble. That's all I'm saying. It has nothing to do with real estate or debt. It has to do with how smart you are, who your friends are, who your teachers are, who you're married to, who your partners are. Those are the things that make you rich or poor. That's it. And at my stage in my life, I'm turning 70, I get sick and tired of talking to people who have answers but no experience. And I'm saying the world has changed so much in the last 17 years or 16 years. It's shocking. It's shocking. You saw my charts at the Real Estate Guys Cruise. We've had 3 major crashes in the first 10 years of this century. 2 stock market crashes, starting with the dot-com crash, and then 1 real estate crash. And yet people are still saving money in investing for the long term in the stock market, going back to college, getting out of debt when everything has changed. So that's why I had you guys study Ricker's article, The New Case for Gold, so you understand that, and same as L. Arian is saying, is the central banks are out of tricks. They can't save it anymore. So they're going to push it up. That's what Rickard was saying. They're going to push it up to the IMF and the World Bank. And then I'm going to have more chaos. I don't know which way it's going to go, but I want to watch when they do that.
Yeah, so maybe an investor's wise to go ahead and align their interests with what the Fed is doing. Even if they don't agree with what the Fed is doing, if they introduce another quantitative easing cycle, that's something that would push up inflation and make someone that bought some gold be in a better position.
Look, everything's manipulated. Our elections are rigged. That's what Donald was saying. That's why gold is rigged. That's what Rickards was saying. So that's why you could call me a pessimist, but I'm really happy when things crash. Unfortunately, most people are not. If you're in the oil business, you're very unhappy today. But a guy like me, I'm happy. And you understand there's always 3 sides to a coin, heads, tails, and the edge. And my job is fundamentally to tell you, smell some coffee, stand on the edge, and look at the good and bad of something. That's all I'm doing.
Stand on the edge of that coin so that you can see both sides. Or as we're kind of winding down here, Robert, is there anything that I should have asked you that I didn't that you want to tell the Get Rich Education listeners?
No, you're doing a very good job. You're a very strong young man. And I'm really quite disturbed about is the younger generation is not as strong. They may be smarter, but they're less EQ. In school, they give everybody a trophy, everybody wins, and nobody gets hurt. I just got sued for sexual harassment. I'm going, what? I just did something. I was like, what? Yeah, you did something bad. And I go, what kind of world do we live in? Then you go to court, the court system is completely busted. And the school system's busted. We can't get anything done in Washington. And so all I'm saying is we need more EQ. We need more emotional intelligence today. If we come with this elevator ride, when the elevator starts heading down, every individual needs to toughen up and go, okay, this is good. I'm losing my job. This is good. Market's crashing. This is good. My dollar is worthless. This is good. It is how I think, because I was a Marine pilot in Vietnam. We were taught to fly my aircraft with or without an engine. That's EQ. I don't care if the engine's on or off. I really don't give a crap because I can fly it. And so my message to everybody is, look, we're coming down big time. If you think what you did yesterday is going to work for tomorrow, it may, but it may not also. So that's why education needs to go to a higher level and study the monetary system. That's why on the Real Estate Guys Cruise, I had you study The New Case for Gold by Rickards, because he says the central banks are out of bullets. L. Arian, who's PIMCO, he's saying the same thing. He says we have less than 3 years. That's L-Arian. He says, we're at a T-junction. T-junction means end of the road. We cannot keep doing what we're doing. So when I speak harshly and I speak strongly to young people like you, I'm just trying to tell you, don't be like your parents. Don't be sitting there hoping to play golf or go moose hunting. This baby is going to change. And we're coming into the biggest changes of all next few years. For most people with high IQ but low EQ, it's bad news. For those with strong EQ, it's great news. That's the difference.
Well, we sure got some wisdom and some motivation on how we can act to better ourselves. Robert, how can our listeners find out more about you?
Well, you can go to richdad.com. We have a lot of programs out there for people online and stuff like this. We have a real estate course coming up taught by the real estate guys and all this. But I am purely into education because my mind, my emotions, my spirit, my health, they're more important to me than money. So I have more than enough money, not because I went to college, but because I took courses, 3-day courses, 3-day courses, 3-day courses. And I look at my college graduate friends today, my friends with PhDs and MBAs. They're retired with IRAs and stuff like this, but I kick their butt every single day in the markets because I don't invest for the long term and I like crashes. If you can get that mindset, you've learned your lesson today. And I would study Rickard's book, The New Case for Gold. I'm not a gold bug. He just explains why the monetary system is corrupted. And L-Arian of PIMCO is saying the same thing. We're at a T-junction, the end of the road, less than 3 years. He said this in 2016. My rich dad said this in 1980. We're here today. So it's time to get up, go to Starbucks, smell some coffee, and have a good time. But when the elevator ride goes down, it's going to be a good time for those with high EQ. Thanks. And the reason I respect Keith, he's a very strong, smart, bright young man. He can take criticism from a guy like me.
Thanks so much, Robert.
Well, thank you.
All right, well, there it was. And you know what? The show where a guest gave me the most praise and the show where the guest gave me the most criticism were probably in the same episode, and that was right here today. Like I said, you never know what you're going to get with Mr. Kiyosaki, and that's why people listen to him, me included. There were a lot of good takeaways today, and I've also got to admit it does feel pretty good to be edified, I guess, by my business hero. Some takeaways for you are Kiyosaki told us he's buying more oil today because its price is low. It's kind of like the Rothschild dictum, the time to buy is when there's blood in the streets. I mean, oil is up off the trough, but you can still buy oil quite low. And when you buy low, it's just simply hard to lose money. You learned that he's reading and following Jim Rickards, Muhammad Al-Arian, David Stockman. Rickard's popular book, The New Case for Gold, I mean, that's obviously a Kiyosaki favorite, and I do own that book. And I've told you before that I own about 1.5% of my total net worth in tangible precious metal bullion, not in electronic promises or paper derivatives, okay? Kiyosaki told us that he likes debt. That's why he likes real estate. He even called himself a real estate guy. I like the smart debt too. I'm clearly a real estate guy. Now, look, many years ago when I was a high school senior where I grew up in Pennsylvania, my classmates, they voted me as the most quiet, shy student in all of our high school class, okay? And they were right. I was just really underdeveloped in nearly every way. When I was 18, I looked like I was 14, maybe 15, okay? And I had plenty of friends in high school, but I could never get a girlfriend, not even close. Like, I didn't even go to prom, okay? So I guess I couldn't have imagined that I'd be a talk show host like this at all, let alone choose to move to and live in Anchorage, Alaska, or be some sort of real estate investing expert. I mean, I didn't come from a background or an upbringing like that at all. Well, it was reading Rich Dad, Poor Dad that, that's what really taught me to stop saying it can't be done and instead start asking, how can it be done? It was way back in 2002 when it was kind of time where I was coming of age. It was time for me to buy my first home, and I decided to make my first home instead of a single-family home. I bought a fourplex building where I lived in one unit, rented out the other 3, and expanded from there. Reading Rich Dad, Poor Dad, I mean, it really helped make me who I am. I probably don't attract mediocrity in my life because I don't emit mediocrity, okay? I attract expansionary friends and an aspirational peer group. So buying $1 million apartment buildings, that's something that would scare most people, but that feels normal to me. I mean, that's what I do today. Actually, you know what I'm scared of? What I'm scared of is to be like most people. I mean, that's where my fear would be. What do most people do? Most people choose to live a small life by continually making sacrifices, continuing to settle for less and settle for less and settle for less, and deciding to live below their means when they could just as easily shift those same energies into expanding their means. I don't have any interest in reading and strategizing about how I can save $20 a week by making coffee at home, rather than buying it out or some zero impact nonsense like that. Okay. That won't expand my lifestyle. I mean, what's going to give you the lifestyle that you really want for yourself? What's going to give it to you? There's a lot of answers, but I know what one answer is not. It is not drinking cheap canned coffee for a year. Okay. Now, finding the next real estate deal, see, now that's what expands my lifestyle. Or seeing a great guest book with me on Get Rich Education so that I know I can help inspire you to expand your lifestyle. Okay. Now, that stuff, that's not living a small life. Most people, they really don't want to live a small life, but once they get out of high school or college, that's exactly what they do. And then they'll go date a person that also learned to live a small life, and they'll eventually marry them. And then they have children that grow up thinking that they've got to live a small life too. So they live below their means. Instead, I bring you actionable content on this show so that you can expand your means. And I launched this show at an Anchorage, Alaska dining room table over a year and a half ago. And you can still go back and hear my breathing into the microphone all over the place there on episode 1. And, really at that time, I didn't know whether or not I'd really have the kind of show where Robert Kiyosaki would come on with me, or that most of his rich dad advisors would appear here on the show multiple times with me like they have. These guests are contributors really because they are aligned with my mission. And that is, I want to make you more successful than me, faster than me. Yes, I want to make you more successful than me, faster than me. If I can do that for you, that's a feeling greater than monetary wealth could provide me, okay? And Get Rich Education, it sure is not a big money-making show itself. I want to be big at making money for others and have a platform on which to give from, I guess. That's one way to put it. You can also check out who Get Rich Education donates to at getricheducation.com/giving, by the way. But if I make you more successful than me, faster than me, and give better than I ever thought I could, then what I've done is I've expanded your means, I've expanded my means, and the means for various charities too. And Get Rich Education, it is not get rich quick, okay? It's about increasing your wealth over time beyond anything that you ever thought it could be. Live better and give better than you ever thought you could. Now, I know a lot of you have listened to all 84 shows, and I almost can't tell you how grateful I am for that. Recently, I even got 2 written thank you notes, like handwritten paper notes in the mail for putting this all together every week. They were giving me thanks, okay? One was a listener from Connecticut, another one from California. For some reason, I remember those paper thank you notes a lot more than the thank you emails. They're all appreciated either way. Look, you need to have an awareness that the middle class is disappearing, and you need to have some options for what you can do about it. More people are being pulled down economically through the profligate monetary policy of the Federal Open Market Committee, through an inflationary mandate, artificially low interest rates, manipulated financial markets, an entitlement mentality, that's a big one, and all kinds of factors that we're basically fighting against every week here. So get passive income, and free up your time. Don't live to get paid to live. We are turning more nobodies into somebodies than anybody. Wealthy people take action because they know that knowledge alone is not power. Knowledge plus action equals power. So if you want to be actionable about building wealth for yourself, Get Rich Education followers are doing that faster than they ever thought possible. And you can accomplish that by doing really just two things. Number one is you're already doing it, okay? You're listening to this weekly Get Rich Education podcast every Friday since October of 2014. And the second action item is subscribing to our free newsletter right there on the homepage at getricheducation.com. When you subscribe there, you're sent actionable opportunities that you can click on. And you can unsubscribe anytime, and virtually no one has unsubscribed. Well, today, Mr. Kiyosaki mentioned his Rich Dad advisor, Ken McElroy, a lot. Ken McElroy will be here in 2 weeks for his second appearance here on Get Rich Education. But first, next week, we'll have a mortgage loan officer here that specializes in how you can buy investment real estate at the best terms and the lowest interest rates for yourself. Well, I'm grateful because I got to interview my business hero today. Special thanks to our guest, Robert Kiyosaki. Again, be sure to subscribe to our free newsletter at getricheducation.com. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream. I just lived one of mine.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.